I think his number of cash is actually underinflated versus what it should be. And he makes it very apparent in his note that when he is buying publicly traded companies like an Apple, like a Coca-Cola that he owns, et cetera, he cannot sell them overnight like you or I could, because he is moving such magnificent amounts of money that he has to wade out of his position slowly. So I think if it was up to him and he was left to his own druthers, he would actually have more cash. And I think in all likelihood, the ship is moving directionally, Warren Buffett's ship, towards holding more cash. He just can't yank a Band-Aid like the rest of us.
Alrighty, folks, Warren Buffett delivered his annual letter this weekend, which we will dig into. But I've got to start with the fact that Warren Buffett, Berkshire Hathaway, is currently sitting on a record $337 billion, folks, a third of $1 trillion in cash. In cash. And I'm curious, Taylor, what does that mean that Uncle Warren is sitting on that much cash? Is that a sign of something to come?
Yeah, we talked about last video, whether it's noise or signal. This is signal. This is legitimately signal. This is him saying there's only one way for him to articulate to the market without scaring the absolute daylights out of it. What he thinks about, and what he thinks right now is that valuations in the market just aren't attractive. And he cannot come out and say that because he could nuke the market himself.
Oh, yeah. He says that explicitly. It's over.
Oh, yeah. If he, Jamie Dimon says something. Jamie Dimon says the economic hurricane's coming, which he said a couple years ago. It impacts the market. But when Uncle Warren says it himself, who's a long-term investor, all of a sudden that would just nuke everything.
Yeah. It's really interesting because not only does he sitting on record cash, but he sold more stock. He's basically putting his balance sheet out there saying, guys, I can't find a way other than treasuries at 4.5% to earn money. Right. The fact that he's happy with 4.5%, that should tell you all you need to know.
And when you start to read through his letter, his annual shareholder letter, he says pretty explicitly that over the long term, you will always have, as a Berkshire holder, more of your share in equities than you will in cash. And he makes it explicitly clear that he is a long-term equity investor, and he thinks that that will be because of the greatness of America, which he pounds the table on over and over. That will be the best steward of your capital moving forward. But at the same time, the numbers are what the numbers are, and he has a record number of cash. Further, I think his number of cash is actually underinflated versus what it should be. And he makes it very apparent in his note that when he is buying publicly traded companies like an Apple, like a Coca-Cola that he owns, et cetera, he cannot sell them overnight like you or I could, because he is moving such magnificent amounts of money that he has to wade out of his position slowly. So I think if it was up to him and he was left to his own druthers, he would actually have more cash. And I think in all likelihood, the ship is moving directionally, Warren Buffett's ship, towards holding more cash. He just can't yank a Band-Aid like the rest of us.
Yeah. The other thing I'm left thinking about, again, I think you've nailed it, right? He's basically saying the market is richly valued. But I mean, for years, he's talked about, maybe even decades, he wants to go elephant hunting, right? And again, it's no secret. I think Warren Buffett's 90 now, 91.
Yep.
I mean, he's there somewhere. He's only got a couple of moves left. He's always told us, and I've read quotes from him, Berkshire Hathaway is like a painting. He's never going to be done painting this portfolio. I saw that he has 153 operating units, some crazy ass number. And I think he's out there looking to land one more monster to put on the board. Do you see that as possible, or is this just more about the market's richly valued and he's taking?
I don't take that as the reality of it. I hear a lot of people saying like, hey, this is him planning an unwind, this and that. Berkshire's not going anywhere. And I'm not saying that's your point. That's not your point. But I've heard other people in the market saying like, oh, he's building cash to unwind this thing. No, he's not. He's already named his successor, and he made that very apparent.
Oh, yeah.
I'm forgetting the guy's name. He's 61 years old. But he's been around for a long time, and obviously Warren trusts him to the nth degree. But there is no build of cash to unwind. I think that what he wants to do is he's very comfortable being patient. The
Yes.
market has not rewarded him for being patient as of recently, but the
Yeah.
market didn't reward him in 2006, 2007 when he built his cash
Exactly.
position, and then he deployed the war chest on Goldman and made them, hold their hands up against the wall, get tied up, and pay him whatever he wanted to be paid.
I still can't believe that Goldman Sachs 10% interest got warrants on stock.
Yep.
There are times to be in cash, and Uncle Warren did it and did it well.
So you know what I'll do though? I'll actually twist your words a little bit there. I think that Warren Buffett, if he had his druthers and didn't have a $1 trillion portfolio that he was moving around, he wouldn't be in cash. He doesn't want to sit in a 4% treasury bill. The problem is the markets that he needs to traffic in aren't deep enough or liquid enough to allow him to go into some more esoteric areas of the market. And so like with our clients, for context, like we sit on 0% cash. We think that it is best suited never to hold cash. Cash is for purchases and investments are to compound wealth over time. And then it's our job as the steward of the capital for our clients to build a portfolio where it manages risk because the pieces move and work in concert to protect each other's risks. He just doesn't have the ability to do that because if you were to go, infrastructure debt is a space that I've spoken a lot about. Mm-hmm. It's $100 billion space.
Oh, he can own it.
Warren Buffett he can't even move into that space because he would overinflate the market when he was on his way in, and on the way out he would absolutely crater it. It just doesn't work.
Yeah, it's pretty wild. Again, I think Warren Buffett is. I think he's going to be at Berkshire Hathaway until, unfortunately, the day he passes or his mental acuity goes. He's going to be there, for as long as that is, and I don't think he's ever going to be done doing deals. I think you're right. I don't see Berkshire Hathaway unwinding. I don't see Berkshire Hathaway going private. It's he's built this masterpiece and he's going to be touching it up to the day he goes.
And where he is seeing value right now and he is deploying capital is in Japan. So there are a few holding companies.
That's right, a trading company or something.
Yeah, there's 5 holding companies, trading companies. Think of Berkshire Hathaway, where it owns a bunch of underlying companies. There are 5 of them in Japan, and he is deploying more and more capital towards those Japanese holding companies because he thinks the Japanese market is a better place from a valuation standpoint than what's in the States right now. And at the end of the day, like every place throughout the world right now has better value than the US, meaning for every dollar that a company in the US company earns, it's the highest payment that you're going to make for that. The price to earnings multiple is the highest here in the United States versus anywhere in the world. And Warren talks a little bit about this. And he said, listen, that's probably always going to be the case. And he talks about a country being a very young country, but it having a very entrepreneurial spirit. And that being why we've been so successful over time. But then he also counters and says, my money right now, where it's getting deployed on the equity basis, is in Japan. So there's kind of this give and take of at what point are other things cheap enough to make them a better value than what is in the States right now.
Now, I hadn't prepared you for this, so you may not have an answer. I'm curious. Do you have a favorite Warren Buffett book? Right? There's been Snowball, which is the official biography. There was The American Capitalist, which was an unofficial biography written years, or if not a decade before. Do you have a favorite kind of Warren Buffett book?
I don't have a favorite Warren Buffett book. I think that where I see the value in Warren Buffett is just his stoic nature. And it comes across in any book you read on him. He is very, very methodical about how he works. But the most impressive point on him is he studies.
Yeah.
And then he acts very, very quickly.
He's and they patient, act. Yeah.
That's exactly right. I just got the conversation with a client before this, and I said, listen, the markets move quickly these days. And he talked about, hey, I want to get back into stocks a little bit more heavily, but I want to see a 5 to 10% pullback. And I said, well, listen, when I call you, you're going to feel like I'm pressuring you into this, but I'm going to use your words, and I'm going to give you the scenario that played out last August. Last August, we had the Japanese yen carry trade unwind.
Yep.
And the market snapped down 6%, and it was back above its high water mark in 2 weeks. And I'm like, so when you're going to act, if that is your intention, hey, I'm waiting on this pullback. You can't sit on your hands when that opportunity presents itself. And that's what Warren Buffett has done so masterfully throughout the years. And in his annual shareholder letter, that came out over the weekend, he talked about the fact that he bought an RV company. out of Indiana. And he said he sat down with the gentleman, and the gentleman said, "Here's my terms." And he said, "Done." And that was the extent of it. He said, "I had done all my homework going into it. I knew a number that if it came out higher than this, that it was crazy. It came in meaningfully below that." The guy called him and said, "I only want to sell to Berkshire," which was a cool interaction. And they went to terms just like that. The guy's wife and 2 daughters sat in the room, and he goes, "What do you want to be paid?" The guy goes, "Pay me $100,000 a year." And Warren Buffett said, "I almost fell out of my seat." And it was just, it's just, he's an old school dude that understands what good value is and then will act on it incredibly, incredibly quickly. And the terms oftentimes are incredibly advantageous because it's a time where the market doesn't want anything to do with it.
Yeah, being a buyer that a seller calls and you only want to negotiate, that's reputation. That's exactly what that is, reputation.
Yeah, yeah. And it's interesting. We talk to our clients a lot about, hey, having dry powder. And again, we don't hold dry powder in cash. We hold dry powder in other securities that are working in the market, but much differently than equities, where you might actually get a counterbalance effect if we get an equity sell-off that they'll go up in value. But the reality is, if you're young, people who perceive themselves as young, they say, "Hey, I'm a risk taker. I'm just going to ride the market like a roller coaster." Well, that's great and all, but that is doing the opposite of Warren Buffett. That is not leaving yourself at an advantageous point to be able to take advantage of dislocation in the market, because all your money's in. When it's down, you're just down and you're, praying and hoping, crossing your fingers that it goes back up. And then the reality is when it's down, it's really nasty. Your fingers come uncrossed because they're pushing the button on your screen that says sell, and you're out at the wrong time.
Yeah. Well, let's totally switch gears to somebody who is not Warren Buffett. We'll go to Michael Saylor. I don't know if you saw this morning, but it looks like Michael Saylor deployed another $2 billion buying just over 20,000 Bitcoin. I think MicroStrategies now is just shy of 500,000 Bitcoin. Any thoughts on another $2 billion deployed by Michael Saylor, MicroStrategies?
Yeah, now that, my friend, is noise. Warren Buffett is signal. This, my friend, is noise. And I say that because I didn't do the work on this. Someone else did, but I saw this magnificent chart of showing purchasing price for Michael Saylor. And the only time he was not purchasing is when Bitcoin was like this. So, he's going to buy irrespective of what the market price is. I'd imagine he wasn't buying at that trough price because he wasn't getting inflows of capital, and the inflows of capital follow the price. So Michael Saylor is going to buy regardless of what's going on in the markets. And it is what it is. That's noise. Warren Buffett is signal. Is that your take, or you have a different view?
No, absolutely. Absolutely. I follow Warren Buffett. Yeah. Warren Buffett. There you go.
I always say this, and I think I've mentioned this before to you in the past, and I'd love to get your take on it. I see Bitcoin, crypto in general, but we'll call it Bitcoin. Bitcoin is just being a leveraged play on whether it's the S&P 500 or more so even the NASDAQ 100, where the correlation there is very tightly tied. The long-term correlation of the S&P is 0.92. So 92% directional movement together between Bitcoin and the S&P 500. I don't have the stat on the NASDAQ, but I would venture to guess with almost certainty that it's higher than that. And so what you have is when when the market's going up, Bitcoin is going up, but like a leveraged property would go up, it's going to go up more quickly. And on the other side, when it comes down, the house of cards comes down. I shouldn't use that word. The price of Bitcoin comes down commensurate to a leveraged version of the underlying equity market.
I think in the historical context, it's hard to argue that. I think if you are a Bitcoiner or someone that's focused on that, you're betting that there's a change, that it goes to more of a digital gold play. It really becomes that preservation of capital. You really would like to see national government, sovereign entities put it on their balance sheet. That would simply change the game overnight. If the U.S., for example, or frankly China or Japan or Korea or wherever, suddenly created hey, we're going to add, Bitcoin to our sovereign wealth fund, that changes the game.
Yeah, right? Yeah. So. And there are very few nations out there that have sovereign wealth funds, right? Usually it's very export oriented, natural resources.
Oil and
right, because they're diversifying their economy, essentially their investments with what their economic backdrop is. I'm interested to see, and I think that this was an idea that was floated, and I don't know where the follow through, comes from, but the sovereign wealth fund of the U.S., like it really, there come up a lot of question marks of the tangibility of it, how would it happen, et cetera, and TBD. But if they sock that thing full of BTC, that would be certainly a
well, let's talk about the sovereign wealth fund. Let's take that pivot. Let's go down that let's pull that string a little bit. I think it's a great idea. Now, I'm talking sovereign wealth fund, not adding BTC to it. That's a separate discussion.
Got it. Yep.
I like the idea of a sovereign wealth fund because, again, if you go back in time, the federal government, and we could just say Tesla, for example, the federal government does make loans to new industries and new this and new that. And a lot of them are forgivable, right? And I think we should get a call option on those and get 5% or 10%. Now, most of them go to zero, but some of them are home runs.
Right.
And, I don't think it's unreasonable to get a call option for the American people on critical investments like that. I mean, it's interesting.
The CHIPS Act, right? I mean, we're essentially giving out grants to companies to come in and build their semiconductor chips in the United States. So this would be an opportunity for us to see some upside. I guess my big question then comes from the sovereign wealth perspective is, how do you do that? What is the actual functionality for a country like the United States to generate a sovereign wealth fund, especially knowing that we have $37 trillion in debt outstanding on the other side?
Again, smarter people than I, but again, I think a sovereign wealth fund, if done correctly over time, allows you to have assets that you then could liquidate to pay off the debt, right? You could actually articulate it in a way where sovereign wealth fund proceeds can only be used to pay off the debt, right? You theoretically could structure it any way you'd like.
Well, it's a bet on your investment capabilities is what it is, because, you talk about Doge and Doge trimming, $2 trillion worth of whatever. Okay, we're going to give $5,000 in paychecks to individuals. We're then going to pay down debt with whatever, and then we're going to build the sovereign debt, with the other. And so, or the sovereign wealth fund with the other. It's okay. Or you could take all of that and pay the debt. But what you're doing is you're betting on your investment capabilities over time. And if run well, the hardest thing to do is bet against the market over time and win.
Yeah.
And so if done well over time, it absolutely could be a positive impact.
There's a sovereign wealth fund, and I can't think of it, in Europe. Is it Finland? It's not Finland.
One of the Nordic countries has the largest sovereign wealth funds in the world.
And it's all based on oil, but they've done
and it's all socked in tech right now. Literally all socked in tech right now. So if you talk about leverage in the system, like, I don't know if you consider that being leverage as well, but like everything is piled in one direction right now.
Yeah. Very, very cool. Well, Taylor, it's always fun to riff and talk with you. Thank you for being here each and every Monday. Where can people find you?
Yeah, find us on Instagram, on TikTok at Life Goal Investments. Appreciate the hell out of you, Michael.
You got it, buddy. Take care.